FedEx reporting Q1 earnings, missing on the top and bottom lines, cutting its forecast, blaming a weak macro environment. Let's bring in Trip Miller of Gullane Capital Partners. Trip, we've also got Don Broughton as well joining us, who's just connected. Don Broughton from Broughton Capital Management. Trip, I'll start with you. What's your take on these numbers? Quite a big share price pullback as well.
Obviously a very disappointing quarter for FedEx, and FedEx is a bellwether to what might be going on in the economy. And so, we're a bit surprised by the guidance that they gave for this next year. We knew that they were facing a lot of challenges, both from tariffs and also from their integration of their TNT acquisition in Europe, which is over a year behind schedule and about $800 million over budget. So FedEx is definitely facing a lot of challenges, but we think they've done the right thing, cutting expenses and focusing on their ground network that we believe has higher margin opportunity for them going forward, especially as a partner in the e-commerce space, kind of the anti-Amazon delivery company, if you will.
Yeah, I mean, Don, you were really looking ahead to the guidance ahead of these results. What do you make of it?
Well, as we started last week really making the clarity on call, the weakness we're seeing in both European as well as especially Asian Pacific air freight leaves us in the position where it's just really hard for them to do anything other than guide lower on the macroeconomy and to guide lower on earnings. Strategically, are they the little micro things, the investment in the airplane fleet, the investment in the IT, advanced sortation hubs, all the things that they're doing to become more and more efficient, are those paying off and showing up as you get down into the details of this? Absolutely. But the macro is just, it's crushing them and everyone else right now. Tariffs are terrible taxes.
Don, UPS is trading down a couple of percent also, 2% for them versus 7.5% to FedEx. Does that feel about right to you?
Oh, at least, if not more so, because UPS is more exposed to Europe, one. Two, it's a clear historical pattern that FedEx is the A student and UPS is the C, maybe at times B student. And the bottom line is economy goes up, economy goes down. FedEx benefits more than UPS and gets hurt less than UPS in the downturn. So I totally agree. In fact, I actually think UPS probably ought to be weaker.
Okay, we'll have to leave it there, guys. Thanks very much. FedEx down 7.5% after reporting weak numbers. So we've got another earnings alert. It's on Chewy. Eric Chemi's got the numbers.
Wilf, that's right. The stock here with a loss of 21 cents. We're not sure yet if that's comparable to the 11-cent loss that the street was looking for. On the revenue side, you do see a slight beat, $1.15 billion. That's better than the $1.13 billion that analysts were expecting. The Q3 revenue guidance better than expected. The full-year revenue guidance an increase from what they said before and also better than expected. So we'll continue to monitor that stock. Right now, not moving too much, down 0.5%. Back to you guys.
Eric, thank you. Eric Chemi. Coming up, we will break down Chewy's results in a first on CNBC interview with the company's CEO.